Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo.
Thanks, Jim. Happy to be with you again.
The major markets in Canada and the U.S., a major red number day. Somebody said looked like blood smeared across the computer screen. What did you make of this major markdown and I guess meltdown?
Yeah, well, I have lots of thoughts, obviously, and the talking heads are full of stuff, so I don't want to repeat the obvious about COVID and the Fed and all the stuff everybody's already told you. I think there are two takeaways that I'd like to leave the audience with. One is that, despite whatever any expert tells you, nobody knows what's going to happen next. This could be the beginning of the next leg down. It could be that everything that we've seen since the March meltdown is a giant dead cat bounce, which has now peaked, and, that mini balloon, if you will, is pricked, and now it's downhill from here to that reality is settling in. This distinction that we've seen, this divergence between Wall Street and Main Street. So many of us have been, just shaking our heads at that, saying it can't last. This could be the end of that insanity. Or, it could be the opposite. It could just be, the stocks rose so much so quickly that some healthy correction was in there, and a lot of people are at home. They're day trading now, and you have your millennials on Robinhood. These things can exacerbate momentum, and so once Mr. Market decided to sell today, he decided to good and sell hard today. So that doesn't necessarily mean that the rally is over, because you still have the Fed out there, easy money for, we're not even thinking about raising interest rates, is what Powell said. And you've got legislatures printing money like there's no tomorrow, and there's debate now about how much more and when to do it, but there's no debate about whether to print more money. So more easy money is coming, and that has, in living memory, that has found its way to stocks. So it's reasonable to think that it may again. Now, it may sound like I'm not being very helpful here, Jim. I'm saying, well, this could be the beginning of the next meltdown, or it could just be a pause before the next melt up. But I think actually I serve your audience better by pointing out these possibilities and warning them that, it's dangerous to conclude for sure that you know which way it's going to go, because you may be wrong. I think that serves you better than for me to come on and say, oh, yes, here's my great prediction. This is the way it's going to go. Because if I'm wrong about that, I can hurt you.
And, of course, so many people talking about, well, look at how strong the recovery is. The Fed says it has our back. Nothing could go wrong here. It must be the right time to get into it.
Well, right. That's been the narrative since March. The Fed moved so quickly, so aggressively. We thought that all the crazy things they did in 2008, 2009 were unprecedented and off the chart. But those charts are now the foothills, or the anthills, compared to the mountains of response that we're seeing now. And certainly the fiscal response is, it just dwarfs everything before. So, I don't think that's entirely unreasonable to say that a lot of that money is going to go into stocks, and we've certainly seen that already. On the other hand, as my friend Rick Rule likes to say, solvency is different from liquidity. And the Fed can provide a lot of liquidity, so can the Feds writ larger. But that doesn't make for solvency. You can provide all the liquidity you want to, say, a movie theater, but if people don't want to go to movies, or an airline company, if people don't want to fly, that liquidity doesn't help. You still don't have a business that works. So I think it's prudent to be very cautious, But I think that also applies to doom and gloom predictions of, yes, this is it. The next crash is here. I mean, that might be, but nobody really knows. We are so far into uncharted waters, Jim, that I think it's the most prudent thing of all is to run away fast from anybody who says they know for certain what's coming next.
Mm-hmm. Now, you're saying a lot of millennials found out or heard about Hertz Rent-A-Car talking about bankruptcy or restructuring, and that took shares to an unusual high for a company that may blink out of existence.
Yeah, I don't have those numbers right in front of me, but this has been something of the buzz lately, particularly in places like Yahoo Finance, where a lot of younger investors hang out. But apparently, it's sort of one of these Robinhood trades where a lot of the young people who use that app, and it's kind of funny because I don't qualify, but I use that app too because, you know what, free trades are free trades. That's a great price. And despite all the fears about it, I have never had any problems with it. All my trades have been fine. So anyway, I'm not trying to put a plug in for Robinhood. I'm just saying that don't be embarrassed if you use Robinhood too. There's nothing wrong with getting free brokerage services. So that said, it is used a lot by a lot of younger people, and they seem to have more of an investment herd mentality than older people who, I guess, have been burned by different fires, and they don't all respond the same way. And one of these things has been, as you pointed out, this bankruptcy trade. It's not just Hertz. It's other companies that either have declared bankruptcy or are rumored to be bankrupt, and their stocks, of course, tanked. And then somebody noticed and really disseminated amongst this audience that bankruptcy does not necessarily mean out of business. You can restructure. And some of these stocks, if they restructure and they come out leaner, meaner, more successful companies, would be fantastic buys at these prices. And so there's been an enormous rebound, and a lot of this is attributed to Robinhood investors in some of these bankruptcy stories, which is really quite striking because you've got an economy going into a profound, if self-inflicted, who cares how it was inflicted? It's still a recession, if not depression. You've got all these, employment figures and disastrous consumer spending figures, disaster after disaster in the numbers. And somebody decided that it was a good idea to buy bankrupt companies. Now, okay, at some point, everything could be called oversold. But there's no guarantee that any of these companies that are filing for bankruptcy will, in fact, emerge from a reorganization. And they could, in fact, go out of business. Lots of variability there. So it's interesting. I think it's not entirely new to have a fashion like that in investing. But I see it as evidence that the modern world of investing, not just the algos and all that, but the younger traders coming in and the online platforms, and it's not just Robinhood that has free trading anymore. I think these things tend to exacerbate momentum, and that could be part of what we saw today in the broader market.
We'll have more with Lobo Tiggre right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Lobo Tiggre. With the latest action we saw on the stock markets in North America, is this again another warning? Anytime you think it's time to go all in, you should always keep something back in reserve and don't always jump in with both feet.
That's a very good point, Jim, and I would say that as a general rule. But it's interesting that you mention that now because back in March when things were really falling apart, and I thought, not necessarily this is it, this is the end of the world, but I looked at previous crashes, and in all of them, there would be a big waterfall event, or a series of waterfall events, but, a major downturn, and then there would be a bit of a dead cat bounce, and then the markets would continue actually lower for months or years. They would, waffle a bit up and down, but they would actually continue downwards after the big crash, and then once reality started improving in the real world, then the stocks would start turning around again. So that's what I thought. Something like that would happen. And instead, we got something that's, much too large to really, I called it possibly a record dead cat bounce before, but it's so large that it really doesn't deserve that name. So what I'm saying is, I saw opportunity back in March. I saw stocks go on sale that I wanted to buy that I didn't think would stay down. For example, some gold stocks or uranium stocks. Uranium's had a good year this year. So if the broader markets go down, that's no reason for gold stocks or uranium stocks to go down. But I thought that the market would melt down some more, and I thought I'd have lower entry points. So I didn't buy. I did send a lot of cash to my brokers, hoping for that opportunity, which didn't happen. And so I ended up with no new stocks, lots of cash in my brokers, and the stocks just kept going higher and higher, in many cases higher than they were before the crash of March. So I lost out on those opportunities. And since then I said, okay, well, I'm not going to be stubborn about this. I'm not just going to do nothing and sit on my hands until the next big crash. Who knows when that'll happen? For the reasons we were discussing earlier, it seems like there should be more crash, but with the Fed pitching in, maybe not for a long time. Who knows? So then I decided, okay, that doesn't mean I'm all in, though. I'm not just going to say, okay, fine, the Fed's got my back, I'm going to buy everything now. What I decided was, judiciously, I would buy an initial stake in some of the stocks on my shopping list that I really wanted the most, that I was, most unhappy about not having bought in March. And I set target prices that were well below current market. I said, if I get a chance at these prices, not at March meltdown bottoms, but at significantly lower prices than now, then I'll buy a first stake. Not all in, but I'll buy a first stake in these plays, and then hopefully I'm right about the meltdown later, and I'll be able to average down. So there were 5 stocks in particular on my shopping list at the independent speculator that I wanted to buy. And I'll tell you, I've had the market come to me on 3 of those. Haven't been filled on all 5, but the third of those 3 was filled today as you and I speak, Thursday, market meltdown day. So I think that's fantastic, and I don't want to dislocate my shoulder patting myself on the back here, but I think it's an important lesson. It's never a good idea to go all in. You always want to hold at least some powder back in case, the opportunity of a lifetime comes along. But even when you do decide to buy, there's every reason to buy in measure. And so I'm very happy to say that the market has come to me on 3 out of 5 of my speculations on my shopping list. And with this volatility we're seeing now, if it continues melting down more, I still have most of that money I sent to my brokers. It's still there. It's still waiting to be deployed. And I may get chances as good as or better than what we saw in March.
We'll have more with Lobo Tiggre right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, no matter what's really going on right now, are junior gold miners still a hot prospect? Are they very affordable?
Well, it's another interesting question, and I have 2 takeaways again here. And maybe I'll be a little bit more useful than to your earlier question, where I thought the most useful thing I could say is I don't know and don't believe anybody who says they do. So I have 2 thoughts for you here. One is that if there is another big meltdown, everything gets whacked. Everything gets whacked, including gold and gold stocks. But we did see today that even though gold was up, the broader markets were under such pressure that they were selling across the board. So this is a reminder, to be careful to your previous all-in question. And gold stocks were down today. Writ large, GDX was down, GDXJ was down. Many of the juniors that I follow were down. However, some of them that had material good news this week were actually still up today. So that tells me that there are savvy people who see opportunity out there, and when there's volume there, they take advantage of it. So my answer is partly that I think there can be opportunities ahead. Some great gold stocks may go on sale for nothing to do with the price of gold. Gold was up today, and some of my favorites in my portfolio were actually down. So I see that as a buying opportunity for people who are new to those stories. On the other hand, some of them were up, which shows that there is strength here that's separate from the broader market. Now, I said I had takeaways here that will be more useful for the audience. There's two things I think that people should keep in mind. One is, and I'm not the only one talking about this, but it's very important, and that is I do believe that we're going to see a huge wave of takeovers in the space. We've had years, really, of consolidation. We had 4 of the biggest players in the gold-silver space last year merge at the top, and they have been divesting assets, rationalizing their portfolio. So there's been reduced M&A activity in the sector for a while. And there's also been reduced spending on exploration for a long time. That's the first thing that producers cut from their budget when they're tightening their belts. So we have, I hate to say perfect storm. It's such a shop-worn expression, but I do see it that way, where you've had less investment in exploration for years, less discoveries made for many years, and we've had this M&A activity at the top of the market here that will trickle down. And these producers, they either have to discover more gold and silver or whatever they're producing, or buy it, or they mine themselves out of existence. And, they haven't been discovering it, not that much. So I think there's a big wave of takeovers coming. And I have articles on the website. You can go to independentspeculator.com and look for takeovers, and there are several articles there, recent articles, that'll tell you what to look for to take over and what to do, how to position yourself for that. So I see that as a big opportunity. Let's imagine that the markets are scary, they're indecisive, gold goes sideways for the rest of the year, nobody really knows what's going on. It would seem like a terrible time. But if I'm right about this wave of takeovers coming, it doesn't matter. Gold doesn't have to go anywhere for these takeovers to happen. And a takeover bid, particularly in a stock where management and insiders hold a lot of the shares and therefore can resist a lowball offer, the takeover bid needs to come at quite a premium. And we have seen recently takeovers in the 50% range. I can think of some in recent years that were in the 100% range. And that's an overnight pop in the stock if you are long something when the takeover bid comes. So I think this is very important. And whether gold has a great rest of the year or not, I think the takeovers are a potential way to win no matter how that happens. And of course, if gold goes, breaks out to new higher levels, maybe hits an all-time nominal high, that doesn't stop the takeovers either. It's kind of a win-win strategy here this year. I said I had 2 takeovers. The other one is related to the same setup, and that is, in an environment like this, the juniors, they need to show off their discoveries, strut their stuff, maybe de-risk their discoveries, put out a PEA or a pre-feasibility study, show how economic it is. That costs money. And the juniors that think they have something, they need to come to market with their discovery now. They need to drill it now. They need to show the potential buyers that this is a project that they need to consider. All this stuff costs money. That means we'll see, I think, also a wave of private placement. I think I'm seeing this already this year, that the financing activity has picked up. Just in the last couple of weeks, I've alerted my readers to several private placement opportunities in the portfolio, companies that I've been talking about. So I do see this heating up already. And again, the great news about this for the audience is it doesn't matter whether gold goes up or even slightly down or just fluctuate sideways for the year, these companies need money, and they need it now to be able to present themselves to their potential buyers in the best way possible. And whether gold goes up or down or not, you know what? $1,700 gold is a great gold price. We know who makes money at $1,700 gold. We know who makes money at lower prices. We know which projects work at these prices. So I think this is a time not to throw all caution to the wind. As we were saying earlier, I never go all in. But I do think it's a time where whether gold goes up or not, and silver, both takeover targets and private placement opportunities can create excellent opportunities for savvy investors.
Lobo, thank you so much for chatting with us.
Well, thank you, Jim. Appreciate it.
My guest has been Lobo Tiggre from the IndependentSpeculator.com. He was speaking to us from Puerto Rico. If you have any questions for Lobo or any of our other guests, you can send them to info@HoweStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.